Hello and welcome back to the Market Show. My name is Amin and I have a very high concentrated portfolio which only includes what I call a compounding machine. Those are very high quality businesses and most of them are in the tech sector because I am a tech guy. Is this time to buy different sectors? Let's have a look. Today we're revisiting United Health Group. The ticker symbol UNH. Stock that has seen an astonishing and rapid revaluation by the market. We're talking about a company that was trading as high as $621 per share in just November 2024. And now it's trading at $300 range. This isn't just a normal correction, ordinary correction, right? It's a profound market reaction. And to truly understand it why, we need to trace the sequence of events that unfolded. In December 2024, murder of Brian Thompson. The shocking murder of Brian Thompson, the CEO of United Healthcare Insurance Division, sent initial ripples through the company, while the direct impact on financials wasn't immediate. It certainly added a layer of unease. At this point, stock was still generally performing well. The situation escalated significantly in February 2025. February 2025 Change Healthcare cyber attack. This was a major turning point. A severe cyber attack on United Change Healthcare subsidiary caused widespread disruption across the US healthcare system. It's impacted everything from prescription processing to insurance claims, exposing critical vulnerabilities and signaling a massive potential cost for the company. February 2025 DOJ investigation. Around the same time, reports emerged that the US Justice Department was launching a criminal investigation into United Health Medicare billing practice. This doubled down on the regulatory risk perception. April 17, 2025 disappointing Q1 earnings and revised outlook. United Health Group released its first quarter 2025 earnings, which significantly missed Wall Street expectations. Crucially, the company also slashed its 2025 adjusted earnings per share outlook from an initial forecast of $29 to $30 down to $26 to $26.50. This was driven by higher than expected medical costs, particularly within their Medicare Advantage business, due to increased utilization of service. This announcement caused the stock to plunge by over 22% in a single day, marking its worst one-day performance in over 25 years. This is arguably the primary catalyst for the sharp decline. The final blow cementing on the deep sell-off came in May 2025. In May 13, 2025, CEO Andrew Watie resignation and suspended 2025 guidance. In a surprising move, CEO Andrew Watie announced his resignation for personal reason, and even more alarming for investors, the company announced it was suspending its entire 2025 financial guidance. This signaled extreme uncertainty regarding the future profitability due to the persistent high medical cost and the ongoing impact of the Change Healthcare cyber attack. This news sent the stock down further, solidifying its position in the range of $300. The former CEO Stephen Hemsley was immediately appointed to step back into the role. So, to be clear, the decline was a cascade concern around the cyber attack and regulatory scrutiny in February, followed by the definitive bad news of revised, then suspended earnings guidance in April and May, amplified by the sudden CEO change. Now, the critical question for investor is, has the market overreacted, creating a buying opportunity, or is this a sign of deeper systematic issue? Let's find out. While the challenges are undeniable, United Health Group long-term growth story is still compelling, built on several pillars. Let's have a look. First, the aging US population continues to drive demand for healthcare, especially for Medicare Advantage plans, where United Health Group is a dominant player, even with even with higher current utilization. The sheer volume of senior entering this segment provide a robust base. Second, Optum growth engine. The Optum segment is the differentiator actually. It's diversified service from pharmacy benefit to care delivery and data analytics create a powerful ecosystem. As a healthcare shift towards value-based care, Optum ability to manage cost, improve outcome, and leverage data position its long-term growth, somewhat insulated from pure insurance premium pressure. Third, scale and efficiency. As the largest US healthcare company, United Health Group benefit from immense scale, allowing for cost efficiencies, strong negotiation power, which provides a significant investment in technology and innovation. Fourth, innovation in care delivery. United Health Group is actively investing in new model of care, including home-based care and advanced primary care, which aim to be more efficient and patient-centric. This initiative aligns with future trend in healthcare. The sharp decline means the stock is undeniably cheap by historical standards and relative to its discounted valuation. At $300 a share, its price-to-earning ratio (PE) ratio has compressed significantly. For long-term investors who believe the company can navigate this challenge, this could represent an attractive entry point to acquire market leader at a substantial discount. Fifth, industry dominance. Fifth, the industry dominance. Despite this setback, United Health Group remains titan in a non-discretionary industry. The fundamental need for healthcare is not going away. I repeat, even though the stock is declined, there is a lot of bad news in the headline, but the future risks are the fundamental need for healthcare is not going away, which means the fundamental business for United Healthcare is still very strong. So even for next decade or so. However, being cheap doesn't mean risk-free. The future risks are significant and require careful monitoring. For example, persistent medical cost inflation. The biggest immediate concern is whether the elevated medical utilization rate are still temporary blip or more permanent trend. If this high cost persist or accelerate, it will continue to pressure profit margin and future guidance. Regulatory crackdown and legal liabilities. The ongoing Department of Justice probe into Medicare Advantage, coupled with class action lawsuit with increased public and political scrutiny over insurance denial and billing practice, could lead to substantial financial penalties and operational restriction. The healthcare sector as a whole is under intense pressure actually. And one of the biggest threat is cybersecurity threat. The Change Healthcare attack highlighted a major vulnerabilities. Future cyber attack or data breach could lead to further financial losses, reputational damage, and regulatory fines. Moving forward, political and policy risk. Healthcare is a highly regulated and politically sensitive sector. Change in government policies such as adjustment to Medicare Advantage payment model or new regulation impacting Optum PBM business could materially impact profitability. So, in summary, United Health Group is currently grappling with severe combination of operational, one regulatory and reputational challenge that have erased almost half its market value in a matter of months. The stock fell sharply on the cyber attack news and regulatory probe, the most dramatically in April with the disappointing earnings and revised guidance. And finally, in May with the CEO departure and suspended guidance. For the interpreted investor, the current valuation offers a potential compelling entry into a healthcare powerhouse with significant long-term growth drivers like an aging population and its in vertically integrated Optum segment. However, the path forward is fraught with risk, particularly around the sustainability and medical cost, ongoing regulatory pressures, and the company's ability to restore trust and execute its strategy flawlessly. This is a situation what demand for careful due diligence and high tolerance for volatility. Now the question is, would I buy United Health Group? Despite healthcare being outside my primary expertise, the company presents a rare investment opportunity at its current valuation. I'm awaiting the next earnings call to hear management perspective on the current circumstances, and I'm monitoring it closely. That's all for this episode, and I'll see you in the next one.